show begin.
Well, hello and welcome to the second weekend of April. Hope you had a great weekend. I sure did. It was gorgeous weather here. Just wanted to share with you some stats like we talked about last week, and things we learned was that our first quarter was very strong, as it turns out, with sales up 7%, prices up 7%, and pending sales were just 3% less than last year, which is pretty strong. However, unit sales for March were up a whopping 21%, as you can see on the stats there. Inventory is still low, and mortgage rates are very good, which our best friend there, Trena, will share with you shortly. However, news right now is the April pendings are down quite a bit and will pale in comparison if this trend continues. Experts say we will certainly have a soft second quarter, but as soon as the virus restrictions are lifted, things should heat up and we should finish the year ahead. We certainly will know more as we go into the rest of this month, but really we're holding our own. Andrea?
Thanks, Patty. Just wanted to let everyone know that we are adjusting to our new normal, and we're using technology to keep in front of our family and our friends and our clients. And we continue to do business, continue to sell homes, show homes, represent buyers and sellers. So we're still out there working. So we are so excited to have one of our most favorite people, longtime friend, longtime mortgage advisor to all of us, Trena O'Bill with Finance of America. She's going to share her wisdom with us today, and I get to ask the first question. So Trena, what are the mortgage rates doing these days?
You know, they've calmed down. They were low, then they went way out of whack. And last week, because the Fed has finally figured out how to adjust and to help the market in such a way that they've stayed fairly even. And so right now, we're able to get low to middle threes for most people.
Wow.
And of course, it depends on what your credit score is and your loan to value. So if you're going to put more money down, sometimes you get better interest rate than if you put less down. If you're doing a refinance and you're pulling cash out because you'd like to pay some debt off, which, by the way, is a good strategy right now because there's quite a bit of equity in a lot of the homes, and with people that can be somewhat concerned about their income, how it's going to hold up, we're seeing that it might make sense for certain people to roll those car payments and credit card debt into the mortgage. So those are the types of things that you can think about. And if you're curious, talk to me or your lender about if it makes sense for you. So, but yeah, the rates are projected to stay in this range that we're in now for at least 2 months. Then once the virus situation settles a little bit, we're anticipating that we really don't know. Are they going to go up or are they going to stay low? We're really low now. And, even if they go up to 4 again or 4.25, that's still pretty low. So, we're anticipating a good run for 18 months at least of lowish rates.
Well, that sounds encouraging.
Yes, very encouraging. So how about changes to the loan programs, and are buyers qualifying?
Well, that's the $1 million question. Yes, there have been numerous changes to the loan programs that are what we consider temporary changes due to the current virus situation that we're in. And if you think about it, what we're looking for is the borrower still employed, and are they likely to be still employed? And so there's industries that we know that, yes, they'll be employed, and there's certain that there's question about. So, if you're on furlough or been laid off, you're not a candidate for purchasing a home today. But that doesn't mean that it's not a good time to, be looking at the market and seeing what's available. Because, with us all being in our homes for so long, it's a good impetus to be thinking about, this happens. Do I want to, stay in place in this, or do I want a different place? So,
sure.
But yeah, so we do have some stricter guidelines that, if you think about it, they make sense. because what we're trying to do is we're trying to protect the lending platform and give loans to people that will be able to make them, make the payments on them. So, but yeah, we're still quite busy. We still have a lot of people that are looking at homes and that still qualify.
Great.
Trena, would you share a bit about what forbearance is all about with everybody?
Sure. So forbearance is something that came out in the CARE Act. And matter of fact, I have a link to my website that has question and answers on it. But basically, it's not a forgiveness of the loan. It's designed to help people that are not able to make their payment because they've had the income shortage. And so what they're encouraging is if you can make your payment, by all means make it. If you're having trouble making it, you reach out to your servicer. And there's each servicer is going to handle it a little differently, but there'll be a length of time where you either make a no payment at all or a smaller payment. And then after the length of time, then they figure out how are you going to repay it. So it's not something, this is Trena's opinion, this is not something to take lightly. Do it. I mean, if you don't need it, don't do it, is what I think, because we really don't know what's going to happen to people's credit with it. I've been, as you can imagine, on a lot of conference calls about this situation, and you get different stories from different investors. And so that's my advice is take a look at the link that they'll provide with this. Has all the questions and answers, but it doesn't really talk about how it's going to affect your credit. And so for anybody that's been through the past situation, mortgage problems, I just want us to take it, with measure. And I'm happy to chat with you individually if you have that situation.
Great, thank you. What else are you seeing in the market? Time frames for closing? What else is going on?
Well, a fun thing that I'm seeing going on is we're starting to get a lot more appraisal waivers, meaning if the house has enough comparables that's in the database, you run it through the automated system and you get a signal that says, oh, you don't need an appraisal, we accept the value. And so when I have one of those, I can close a loan in about 3 weeks.
Wow.
Need to get an appraisal, then 45 days is what I'm going to suggest. And again, this is fluid depending on, how many people, jump back into the market now that the rates have dropped the last week or so. The more people in the market, the more it slows the process down because you still need to get title reports and stuff like that. But, if you're in the market for, wanting to buy a new home, this, Trena's opinion, is a great time to be looking because a lot of people pull back and, they just want to wait and see. But if you're comfortable that your job's going to be there and, great time to be in the market, probably some really good negotiating options, right, Patty?
Yeah, and there is all inventory coming on every day. There's a substantial number of listings coming on. People need to move on with their lives, and so they're putting their homes on the market, and we're seeing people purchase. So we hope that you will consider this information and share with your friends. I think Trena's got a link that we'll include, and we'll also attach those stats, right, Ashley? All right. So anything else?
Well, thank you, Trena, so much for sharing your wisdom. We really
my pleasure. You guys all stay safe, okay?
Thank you. You too.
Okay.
All right.
All right. Thanks. Bye.